Welcome back to Markets for Millennials. This is the weekly recap for the week ending May 28th, 2021. And this week, this video is going to be primarily focused on markets being somewhat undecided. A lot has been happening, a lot has been in the news this week, last week, and I think the markets are trying to digest those things. I would say maybe the equity markets are looking up, looking to move up, given the latest news. Obviously, even just today, today we had the announcement about President Biden's budget proposal, and it looks like more than $6 trillion in spending in the next fiscal year, on top of obviously the expansion of the government's balance sheet and the Fed's balance sheet that has happened since the crisis in March 2020. So one of the things that has been happening is this part of the proposal involves this increase in the tax rate, corporate tax rate from 21% to 28%, capital gains rates increasing, returning the top personal income tax bracket to 39.6%. That's basically to undo what happened in the 2017 tax cuts under President Trump. And so I think the markets are kind of undecided as to how to look forward and move forward given this information, because on the one hand, the spending is, it's usually asset inflationary, but at the same time, when you have tax rates increasing, that also can be a headwind to markets. So it'll be interesting to see what's happening, what's going to happen going forward. We'll start out by looking for our technical analysis. We'll look at the DXY, take a step back, look at my 3-day chart here. We've had this increasing or this ascending long-term trend line, which we've been flirting with. We're on our second time now, getting down towards that trend line. To go back to the daily chart here, if I move this over a bit more. We had a little bit of a bounce at the beginning of January, and then peaked out the end of March, and we've been on a long downtrend since then. I put this trend line in, touching from March 31st to May 5th and May 6th. We had a touch here yesterday on the 27th. Today, overnight, if I go to an 8-hour chart, you can see what happened here. We, in the middle of the night, we spiked up, and then we've come back down. We had this huge wick up, sold back down, and then our 8-hour candle from the New York session has been down, and it looks like on the daily chart here, if we zoom in real close, it looks like we're going to close below this ascending trend line. So this to me looks like a fake breakout from this descending trend line. And so as you can see here, if I turn the auto off so I can focus in here, right here where we're at is a really important moment, because this long-term ascending trend line that goes back multiple years is we're wedging into that. We've been obviously on this long downtrend ever since the crisis, ever since the Fed started QE again, and all the spending that's taken place. It's been devaluing the dollar, and of course, got to remember the DXY is at least 50% weighted to the euro. So it's helpful to remember, but once again, as you see here, we're at this inflection point on the DXY where it's gotta go up or it's gotta go down. I mean, I guess we've been sideways for some time now, but it's just hard to see this continuing to move sideways given the pressure. My personal view towards it is that it's going to break down. I think that this move up, this wick up, and then the sell down since then is more evidence of that. Anytime people try to come in and buy the dollar up, it just gets smacked back down. And I just don't see how the dollar won't move further down. It's just my thought. It just seems with the macro backdrop that we have a situation where the dollar is going to continue to be devalued, and lest anybody thinks that that the dollar couldn't possibly go down further. If you just look at this over the long term, we've had these waves, going back. We had in the late 80s and in the 90s at various points. All throughout the decade of the 90s, the dollar was under the level that we're at now. In a very long stretch in the early 2000s, all the way to the mid 2010s, the dollar was below this level. And so it's not out of the question that the dollar would drop down below this support level at 89.242 and even go lower. I think if it does break down, below this level and retest it and resume off, we'll get below this support level, or this support level, and resume down. If that happens, we've got a long way down to go. I think it'll be a huge moment, and so that's something that I'll be looking for over the next little while. And I think the markets are trying to digest how to deal with that. Obviously a weaker dollar is good for equities, but I think, again, I think the reason why, in spite of, just look at what's happened today, in spite of the news about the money that's going to be spent, the S&P futures are, they're down in comparison to where they started. You see that the body, it's a red candle, and the body is down from the open. And so, I think that maybe initially the markets reacted to the news by, being up. If we go to an 8-hour, we can see kind of how that looked. So you can see we sold up a bit, but then we've sold back. So I think as the market digested, all the spending means that the dollar is going to be devalued, but at the same time, if that's offset by taxes, then I don't know that the market knows what to do with that right at this moment. But that's not to, I'm not trying to be gloomy and try to make any sort of bearish case for the markets. Look at where we're at. Look at this uptrend ever since the crash, and we're at support. We're not far away from the all-time high on the S&P. I think buying right here, if you bought this week after we broke through this what was resistance for the last week and a half or so, if you bought there, that's great. I think we're just going to keep going up. Could be wrong, but that's kind of what I'm seeing on the S&P. On the NASDAQ, we're almost at a place where I would be comfortable buying. Maybe if you bought on Monday, with this green candle coming up, maybe if you bought there, that's pretty aggressive. I would wait on the NASDAQ to clear this resistance level at 13,879, and then get a retest of that before buying the NASDAQ if you're buying futures, or if you're buying the Qs. To me, that's a little bit more of a safe entry. I remember, if you remember last week or the week before, when I talked about buying down at this level off this support at around 13,000, that was also a good place to buy. And if you did buy there, you're looking at, from that spot, it's 5%. That's a pretty good gain. So maybe you should be thinking about, because the NASDAQ still hasn't reached its all-time high, back to all-time highs, and we haven't gotten above this resistance, then maybe you ought to start looking at maybe taking some of your profits, maybe taking a little piece off. And if you're in futures, maybe moving your stop to break even. That would probably be the wise thing to do, just given that you're at 5% profit if you took that trade down there. The Dow sideways for the last few weeks, ever since the beginning of May. We have not yet retaken the all-time high. This move, from kind of bouncing off this support level, we're around 1.3%. Pretty good, but I'm not going to chase this. Honestly, the Dow is pretty boring this week. And the Russell got above my ascending trend line here, so that's good. But again, not great, not something I'm excited about yet. I just added this trend line, this descending trend line from the top. We got a touch here, so I think that once we clear that, maybe we'll move underneath this overhead resistance at 23.15, or if we get above it and retest up and resume off, then that'll be where I would get a little bit more excited about entering the Russell. But overall, equities, while looking still bullish and looking better, it's not something I'm going to chase right now. I didn't take any of those trades I mentioned, but if you took the trades, then consider taking some profits, moving your stops. And I'm just not interested in equities right now because I don't know, if we take a stop over here and look at yields, because yields are still sideways. This is, again, just continuing to believe that the markets still don't really know how to take the news on the spending, the budget, the taxes, and all of that. We had over the last week, we've had yields again come down underneath my descending trend line, my long-term. Let me go to a weekly chart. It's better that way. My really, really long-term descending trend line, after having popped above it over the last few months in April and in March, and then again this month, we're back below it again. We're underneath resistance at 1.675, but above support at 1.50. I drew this, what to me it looks like we're in a bull flag kind of a pattern, and I know that the lower end of this bull flag, you could move it to a couple of different places, and I think it works just fine. I'm just going to leave it here because to me this seems like the bottom, lower band area, so I want to keep myself safe. So I don't know, we're just sideways, and it's not certain which way yields are going to break. And I think that's maybe why we're seeing, even though, like I said, the equity markets are bullish still, I think that's why we're seeing some hesitation. We're not seeing any real big moves, or if we are seeing big moves, they'll move just as quickly the other direction. And I'm just not seeing anything decisive. And I think, until the dollar decides what it wants to do after being in this sideways range, and until yields decide what they want to do, markets are still kind of up in the air. After a really good run up in gold ever since the end of March, from the retest of the bottom here at 1675, we've been up, goodness, it's been, in 2 months we're up over 13%. So that's pretty good. Came up for I previously said that this resistance level at 1916 is kind of the last line for me, the last major, one of the last major horizontal resistance lines to get above, for me to really get really excited and to believe that, new all-time highs are just going to be a stone's throw away. We got right up underneath there, got rejected, and we're kind of pushing up a little bit. Again, I'm looking for the break of this trend line, and then a retest and a resumption off. And then I think we're off to the races there with gold. But again, a really nice rally in gold, looking really good. And I think that it helps that yields have been basically sideways. I think it's interesting that yields have been sideways ever since the end of, ever since that time, in that time that gold has been up since the end of March. So here we go, March 31st, we started this up move. Go back to the yields for a second. March 31st yields, they are down, but they're mostly sideways. Not exactly correlated there. But I think the fact that yields are sideways has been giving people more confidence in gold. Silver, we had this trend line here at 28.35. We wicked above it, but then came back down. And so we've been sideways basically all week. We had a good couple of days, gave most of it back, and then another good couple of days. And so silver also, getting to the point where it's going to be really exciting if we can get above this trend line and resume off, then I think it's off to the races. So again, have some patience. If you took some of these entries, I know that a lot of people were looking at this descending trend line right around there. I know it's kind of squiggly and off, I'm sorry, but a lot of people took the trade right around here in this area, and if you did, you've got, at minimum, you're looking at over 12% gain, just like on gold. So that's really good, but and I think you move your stop to break even, but you don't take profits, because I think that silver's got a long way to go. You don't want to take your profits too early. You want to let your winners run. So that's kind of what's going on. The markets are, again, I think equities are uncertain, bullish but uncertain, and I'm still carefully treading my way through. Obviously, Bitcoin's been the story for a long time. We had over the last 2 weeks just some awful bearish price action. And here we are. Bitcoin looks like it's going to close before this trend line, or below this trend line I have, which comes from the start of the bull market. And we've wicked down a bunch of times, closed below. I feel like this trend line support at 34,454 is going to be really, really important over the next few days. We'll see if we can hold that. And so far on the upside, 40,000 has been really hard to break, really hard to stay above. And so I kind of have, So I kind of, as far as Bitcoin is concerned, let me draw back in this trend line that I had down here. It's a little dark, I apologize. I was drawing these on the 8 hour. Maybe I'll go to the 8 hour for a second. I had basically a couple of different trend lines going on. This is a good look at it. I'll go back to my daily for a second. I basically had three trend lines that I was watching. I had the really steep trend line. It's good that we were able to get above it. So things are looking a little bit better on Bitcoin. Now the next goal is going to be to get above this kind of like step 2 trend line, which it's interesting. A lot of people kind of freaked out right now. I actually think we'll get above, this horizontal resistance around the same time we get above this trend line. And then I think, my base case, and I haven't been shy about this in spite of what's been going on. My base case is that, before the middle of June, we'll be back close to our, somewhere in the vicinity of our all-time high. And that's just my conviction. I don't think the Bitcoin bull market is over, even though a lot of people are saying that they believe it is. I think that what we saw, I wouldn't call it a black swan event. What I think we saw was higher volatility because of the amount of leverage in the system. It's just really dangerous that people were doing that, and I think that a lot of people have gotten hurt because of that. And maybe I think on the way up, it was a little too easy for people, and the speculation was rampant, and so I think all the liquidations were healthy. I'm not happy that people got hurt, but obviously reckless behavior is, you always have to be prepared for your downside risk. And wise people have always said, don't invest what you're not willing to lose completely, and be careful about your speculation. Don't invest in what you don't understand. Don't do things if you're not, if you don't understand what you're doing or what it takes to manage these kinds of trades and things like that. So hopefully people learn their lessons. But again, in terms of the technical analysis, we still have a lot of work that needs to be done to regain some important technical levels before things start looking clear. I think it's good that we're making a higher low. So we had this wick down on the 19th. We had a higher low May 23rd. We are having a higher low right now. I think that's good. If we can keep making higher lows, then I think that things are going to be just fine in the end. I saw some people on Bitcoin kind of looking at this triangle pattern. Maybe, I don't know. I'm holding out judgment on that. But again, really important for Bitcoin to keep this support at 34,454, and to start progressively moving up. Bitcoin is precarious, but if you look at it again in the long term, it's still from the halving date. From the halving, it's we're still up 300%. So that's a good place to be. And for my part, I bought somewhere in this range. So I still feel okay. I know that not everybody did that, and so I want to be cognizant of that and understanding of that. I think for me, losing if we take out the swing low at around 30,000, I think that's going to be it for me. I think that's where I'm going to have to really reevaluate what I think Bitcoin is doing, and when I'm going to want to get back in and all that. So that's just where I'm at. I'm still a believer. I still have conviction in the trade, and until price action, meets it goes to the places where predetermined levels in my head and to my own analysis, then I'm still going to hold that position. And to me, I still think the risk is ultimately to the upside. I still think that we have a couple more months before Bitcoin peaks. And the question is not whether or not we still have upside to go. To me, it's more how far will we go to the upside. And so that's my thoughts. Thank you for tuning into this recap video. If it was something that you learned from, or if you enjoyed the analysis, go ahead and like and subscribe and share with somebody who you think might find it helpful. And I'll see you guys next time.